So I'm always trying to figure out how technology is going to change the world of shopping centers and retail real estate. And right now, venture capital seems to be the driving force behind much of the technology that is shaping our industry. But how does venture capital work? And what are the big bets in PropTech that VCs are making? Well, I don't know the answer, so I had to bring in an expert to find out. So JLL Spark is the corporate venture capital arm of JLL. They've invested more than $445 million, so that's nearly $500 million in early stage tech startups. I want to know, what are they investing in and how that will shape our industry? So today I'm talking with Raj Singh, managing partner of JLL Spark. Live from Las Vegas, it's Where We Buy. You're listening to Where We Buy. It's the show where we talk with retail experts and we visit the places where we buy. My name is James Cook. I research retail and real estate for JLL. Welcome, Raj.
Awesome to be here. Thank you, James.
So for folks that don't know anything, let's say you're at a cocktail party. And they say, you're JLL Spark. What's that? How do you explain it?
Yeah, actually, not as easy as it might sound. But what I tell people is that, real estate is one of the largest industries in the world, and yet we haven't really taken advantage of technology. So the idea behind Spark is, can we bring that technology that's out there in the world today and apply it to the way that JLL works and to the way that our clients work in order to improve our returns? And that's really the simple part of it. And then we really talk about this concept of technology for the built world. How do we take what's being developed today and apply it to our use cases? And then if they're not sleeping by that point, I'll go on and give a few examples.
Well, we're going to get into some examples, but we're going to do it in a fun way so the audience doesn't fall asleep.
Makes sense.
Okay, but here's the big question that I'm sure you hear a lot from people in the industry. So JLL is a commercial real estate company. What business does it have investing venture capital money in startups?
So really, it goes back to Christian Ulbrich becoming CEO over a decade now. And when thinking about, how do we differentiate ourselves from our competitors, one of the ways that he hit upon was this idea of bringing technology to bear. We have been, I hesitate to say it, laggards in the adoption of technology. So the idea is, as technology evolves and allows us to do more interesting things, perhaps with fewer resources or perhaps more successfully, how do we apply that to our industry? And the reason why we have a right to play here is that what we've done over time, since 2017 when Spark was formed, is we've built a team that understands venture capital inside a company that understands real estate, JLL. And so that's really the reason why we can play here, because we've got the experience of 200 plus years of being in the industry, plus a group of people who understand technology and how to invest in it. And that combination, I would say, is unique in our industry today.
Gotcha. So you're in this space we call PropTech, right? How many, which is tech for folks that don't know, it's technology around real estate, right?
Right.
Explain it?
The way I prefer to say is technology for the built world.
Okay.
Because it's a more broader term.
How many VCs out there are playing in the technology for a built world space? Is there a lot of competition?
There is some, but I would class the VCs out there in two ways. The first is the generalists. The generalists will invest in any sort of technology in any industry, but they might do one deal a year, maybe one or two deals a year. And then there are the specialists like us, and we only work in this space. So in terms of specialists, there's probably 20 or 30 worldwide. And then you have to differentiate by what stage they invest at. So some companies are investing in very early startups, people that have an idea and a couple of folks, and that's it. Some people prefer to go for the late stage where there's already potentially millions of dollars being generated in revenue. We sit at the early stage. We invest in what's called Series A. This is where companies have maybe $500,000 or $1 million of revenue. So it's not quite baked yet fully, but you can see that there's promise there. And if I think about who competes with us, there aren't actually that many. It's a handful of companies that are out there. So it's relatively limited in terms of competition.
So the scope of an investment, what kind of, like, it's just not my world, so I'm going to ask you dumb questions.
For sure.
You make that investment. What is your expected horizon timing for return on that investment? Like, what's the exit look like too?
It's actually a great question. So if you invest at the early stage, as we do, the time horizon can be many, many years. And it depends in part on the economic cycle. When things are booming, you might expect that company to exit within 6, 7 years. When things are not booming, it could be 10 years. And so it really is a long-term bet that you're taking here. And, there are so many variables. The obvious one for our industry is COVID. And so COVID really sort of threw the timetable up in the air just simply because it was so unexpected and it was so difficult for our companies. So you really don't know, but it's definitely not a quarter-to-quarter type of situation. It's multi-years.
And the exit is they get acquired or they go public.
Yes.
Usually it's acquired, though, I would guess.
Usually it's acquired. There are relatively few companies in the built world tech space that are IPO'd.
Well, let's dig into that a little bit more. Talk to me about some recent investments or some good examples of companies you've invested in.
Yeah. So let's give a couple of examples. There's one that we invested in a couple of years ago now called Cubic, QBIQ. They're out of Israel, but headquartered in New York. And what they do is they provide you with a way of taking a 2D plan of an office or space and converting that into a 3D rendering. Why that's so powerful is that you're a leasing broker, you've got an empty space you're trying to help a client move into. To bring that to life, you can use the Cubic software to illustrate to the client what it would look like if they were in there. You can allow the client to decide how many desks they might want there, how many conference rooms, common areas. They can build it to their own specifications. And then once they've got that rendering, they can fly through, so to speak, the virtual world that they've created. And if they then decide they want to change something, they can change it. It's a very powerful visualization tool that we have used very successfully with our clients to help them understand what that space might do for them. So that's a great example of a company that uses data, that uses AI to be able to deliver that 3D rendering and moves very quickly and works well at the point of sale. Perfect fit for JLL. Another example of a company that we invested in is called Elise AI, also based in New York as it happens. And what they do is they apply AI to the process of multifamily leasing. So you're looking to lease an apartment in a building. You want to talk to the broker about the situation. You can talk to Elise instead. You can email the AI, you can chat with the AI, or you can talk on the phone with the AI. And the AI will give you the information that you need 24/7, very patiently, never getting it wrong, repeating whatever you need to do. It'll organize appointments for you, tell you all about the neighborhood, tell you about how the HOA fees work, and so on. So it's incredible how the technology has allowed like a near human experience that is very, very good. People love interacting with the bot. The bot can speak multiple languages and switch fluently between them all. It's crazy. And this level of technology that we're investing in now is a game changer, I think.
That's interesting. So you as a property owner would, you own a multifamily building, you'd install this on your website, say. Is that how it works?
So you would install the capability, you would feed it all the information about your building that you have, and so it would only use that information. It will never hallucinate by using information it finds on the internet or something of that nature. And then you allow people to interact. Initially, they interacted via chat, but as soon as they were able to telephone the bot, it just was a game changer. Because,
really?
Yeah, now you can just have a normal conversation like you and I are having right now, and you would almost never know that it does that thing.
Oh my gosh, that's really interesting. Well, I'm going to dive in a little bit on something you said, and that's the fact that it doesn't hallucinate. I kind of felt like, hallucinations are just a problem that's not been solved yet, but there's ways to fix that for this. Like, how does that work?
So it really comes down to the data that you give to your AI and then the stance or the positioning that you give to the AI.
Okay.
So the way that the AIs that are out there that we all use every day are given a stance is that they want to please you.
Yes.
I know it sounds weird to talk about technology as a human, but they are always looking to sort of flatter you and tell you how wonderful you are. And so in the service of that, sometimes they'll tell you you're right about something that you're not right about, or they'll give you an answer they think that you will like, even if that is not actually the correct answer. But by limiting the data and by making sure that you position the AI to answer questions truthfully and to say it doesn't know when it doesn't know, you can eliminate pretty much all the hallucinations.
Okay. Another one I saw you invested in is Ren Systems, which I've test drove that one and was really impressed by. Tell folks about that.
Great. Yeah, we love Ren. So what they do is they replace you reading the newspaper in the morning to see what's happening with your clients. So I'm imagining a senior executive on the train into the office, going through the Wall Street Journal, looking for information about their clients, clipping that, and then using that as a way of, calling up somebody saying, oh, hey, I saw you in the news, and what about this, what about that, and leading that conversation to something interesting, building a relationship. Ren does that for you. 6 a.m. every day, you get an email curated with two sorts of lists. The first is, here, I know what's in your calendar. Here are all the people you're meeting today. This is what happened with them recently. And it allows you to then say, oh, hey, I saw that James was doing this thing. What was the impact of that? You can actually interact with the AI and it'll give you more information as you want it. And then the second list is just generally things that are happening. So, I might find that you, James, have been involved in some interesting project. And it may not be that I'm meeting you today, but I might want to then just say, hey, that was awesome. And so what the AI allows you to do is to send an email to that person, and you can couch the email in a couple of different ways. You can have it as a congratulatory email. So, James, that was amazing. Really well done. So happy for you. It could be a commiseration email. Like, I'm so sorry to hear that thing happen. How can I be helpful? Or it could be more neutral in tone. So it actually learns your style and then allows you to deliver that. So just I have a friend, and he's often in the news, and I do use Ren to send him these messages. He sent me back a message once. He said, I know you use Ren, but even though I know that, the fact that you're emailing me is so awesome. I love it.
So I had a Ren trial for a while, and I absolutely loved it. Getting an email every morning with an update on all the people I know who are in the news and are quoted in different publications, new deals that are announced. I was really impressed. And it's not like this machine just sends generic emails out. It's like I look through and say, oh, I want to send them a note, and it'll give you a draft of an email, but I usually would rewrite it a lot anyway. Yeah. So it's very personal. It's not an impersonal thing at all.
And I think the amazing thing about that is that we always talk about how we're in a relationship business.
Yeah.
And we worry about the impact of technology. But this technology helps us to deepen the relationships that we have with people. It's amazing.
Yeah, it's the perfect use of technology, for sure, to help you feel closer to people and just on top of what everybody's doing. Okay, so you're out there looking for these companies to invest in.
Yeah.
How do you think about evaluating these investments? What are you looking for in a company?
So we have a couple of criteria that are really important for us. The first is strategic fit. Do we believe that by investing in this company, we will enable JLL or its clients to be able to deliver a better result? If it is not the case, we won't invest in them, no matter how spectacular they might be. So that's the first barrier, if you like. Does this company give us a strategic edge over whoever else? The second barrier is this company likely to be extremely successful financially? And the reason why we have those two gates, if you like, is that it's not strategic to invest in a company that's going to fail soon. They won't be around to be helpful for you, right? So you have to find a company that has that right balance of they're going to be a big, successful company. They're going to be around a long time. You can use them and rely on them. But then also a company that understands the part of the business you want to put them against. They've got to understand capital markets, let's say, right? So if you've got a company like DealPath that we invested in, they're all in on the capital market side. they're successful, and so they check both boxes. If we don't find companies that check both boxes, we can't really invest. It's just a waste of money and time.
I gotcha. Yeah, you want to, you definitely want to make your money back for sure. What are red flags that you see out there? Like, what's something? Obviously, I don't think it's going to make money. Is a big red flag. Are there other red flags you see?
Yeah, I think the two other areas where we often see red flags. One is the team. The team may not be, in our opinion, the right team to go do this. Sometimes you find folks who are not terribly experienced in the field, they came across a problem during their everyday life and they feel like they can solve that. What they don't know is that 50 other people try to solve that. And here are the nuances. So very smart people tend sometimes to not understand that they don't know what they don't know. And so that can be a red flag when they've made a lot of assumptions. And we now, having seen so many companies, can spot those pretty quickly. So that's definitely a red flag. The other part of the team that can be an issue, which is no fault of anybody's, is that the chemistry between them and us isn't good. All that means to me is that, if you were in trouble, right, would you want that person by your side helping out?
Okay.
And vice versa. And if there isn't a good fit there, it's probably not a great investment for us. So that's definite red flag. And then the other area I would say that's a red flag is the size of the opportunity. Sometimes people go after very interesting problems, but only 10 people in the world have that problem. And this isn't really going to turn out to be a successful financial investment. So we're looking for big problems. We call it the TAM, the total addressable market. Is the TAM big enough that this company in itself could turn out to be something big and successful? And if it isn't, regretfully, we're going to have to pass.
So once you decide to make the investment, how involved are you in the day-to-day of the company that you invest in?
So it varies. So the perfect investment is a group of people that you get on with and love with a huge TAM and a great idea who need nothing from you, right? Now, of course, that doesn't really exist. And so we're involved at a couple of different levels. So the first level is we have people in our team who are the investors. They're the ones who are making the decision about doing the deal. Those people continue to be involved once we have done the deal, but they're involved at the strategic level. How do you take the direction of this company? Maybe you need to hire somebody, or maybe you swap out somebody. Maybe you need to change the product mix a little bit in order to be successful because the world has changed. And so that involvement tends to be on a weekly or monthly cadence. And that goes throughout the life of our involvement with that company. And then the other type of involvement we have is from our growth team. And what our growth team do is they say to the startup, okay, we want you to be able to use JLL as a distribution channel to our clients and also for ourselves. How do we help you to retool your offer in a way that makes sense? We've got 115,000 people, I'm not sure how many it is today, in JLL, and it's a complicated organization. 80 countries. It's a big thing. So how do we need to help them to get to the right people, to craft the offer in a way that our people understand and that our clients can take advantage of? And that can be a very day-to-day type of thing. So we want them to have the right marketing materials. We want them to have a business model that makes sense for the way that we would sell to our clients. We want to be able to integrate them into the services that we provide so that they become either an enabler of those services or an addition to the services where our competitors might not have that ability. And so when a client's making a decision, they might say, I'm going to go with JLL because not only can they do all these things, they can also bring this. And so that actually takes a lot of time and effort to get it right. And so that can be like, a continuous involvement. And so the investment side and the growth side, that will go on for years as long as we're working with that company until hopefully a great exit or a merger with somebody.
So on that growth side, is there a great example? Like, what's the most successful of your investments that you've really helped facilitate a lot of growth with now?
So Cubic, I mentioned earlier, that's one example. We've processed over 150 million square feet through JLL with Cubic. That's huge. Another great example is a company called VergeSense. They're based on the West Coast. They do what they call occupancy intelligence. So it's using sensors and Wi-Fi signals to work out how many people are in the office, How many people are in that conference room? How long were they there for? You don't know who it is. You just know there are people in the room. And this has been super helpful. A lot of our large organizations that we're happy to call as clients use VergeSense in their offices to be able to understand how well is that building being used. Do I need more space? Do I need less space? Should I close down the 5th floor on Fridays because we don't have that many people in the office and we can save heating, lighting, and cleaning costs by not using that floor that day? So real-time dynamic decision-making using VergeSense's AI and their sensor understanding, that's been going very well.
So I said at the top, you've invested almost $500 million, which sounds like a lot of money to me, but in the VC world, is that a lot of money?
So for our stage, it is a lot of money. In the world of built world technology, it's a lot of money. But you're absolutely correct, James. These days, we see the generalist VCs raising 5 billion, 10 billion, 20 billion. And what's really driving that is artificial intelligence.
Okay.
Because there's just such a huge demand for money to be able to drive the tokens that you use for processing in AI. And if you look at the amount of money that's been invested in VC in the last couple of years, it's really dominated by a few investments into OpenAI, into Anthropic. Those dwarf the rest of the investments combined. And so that's really what's going on here is actually, it's for another podcast, but the world of VC is changing significantly, driven by this desire to raise huge amounts of money to fund AI.
Wow. Do all of your investments have AI components?
No. So we are fortunate in that some of our investments are a combination of hardware, software, and proprietary data. And so they are relatively resistant to the siren song of AI. That being said, pretty much all of our investments that we've made in the last couple of years have an AI flavor to them.
Right. It's interesting. So we're talking about all of this demand for tokens to run in the different AI models. You're beholden. There's very few models out there. Am I right? So you're kind of beholden to this small group of companies. Is that fair to say?
So in terms of the well-known models, there are only a few.
Okay.
However, there are a large number of open source models. And some of the smart companies that we've invested in take advantage of that by applying different models to different problems. So it turns out not every model performs as well on every circumstance. So if you're smart, you can employ these open source models and train them to do different parts of the problem solving and then bring that all together. So it's kind of like an orchestration of AI models. And when you think about it that way, there are probably a couple of hundred different models out there that you could try out.
Oh, that's interesting. And some are just less expensive. They may be less robust, but they do the job, I guess.
Right. So it turns out that the large language models require a huge amount of processing and training in order to be effective. But you can also develop small language models as well, and they are developed on a smaller corpus of data that is specific to an industry or a field. And they can be almost as performant as the large language models because they're not concerned about things that are nothing to do with that field. So you can train them on a much smaller database. And in those instances, you can have something well-trained that is exactly right for your needs, but can't tell you about what the temperature is in Peru right now because it's not relevant to what you're trying to do.
Gotcha. So JLL's AI platform, this called Falcon.
Yes.
Right? Is that what that is, or is that something different?
Falcon does take advantage of multiple models at its core. What we have, which I think a lot of people don't understand, is that we have a lot of proprietary data. So, stepping back from this idea, right, AI is going to eat the world. That's what people are thinking. However, the reality is that it's not about the AI alone. It's actually about the underlying data that you feed into the model. JLL is in a very fortunate position. Being such a large player in our industry, we have a lot of proprietary data. And so over the years, we've worked on this thing called the Enterprise Data Platform, or EDP. And we now use that as the basis to train Falcon and the application to sit on top of Falcon. So we have an advantage that it's hard for other people to replicate because they don't have our data. The locus of competition is moving away from an application that does something to the distribution model, how do you get it to people and get them to use it, and to the data that underlies it. And the reason for that is that I can code up something in Claude Code that is 80% of pretty much anybody's application out there today, but it's not useful unless I have the right data to go after it.
Gotcha. So data more important than ever.
More important than ever.
So for our listeners, maybe they have their own company, they're an entrepreneur, but they're all in the retail real estate world. What should they be thinking about in terms of technology? Because I don't know about them, the listener, but me, I'm overwhelmed with everything that's out there. How should they tackle it?
The classic answer is start small.
Okay.
I think the way is in retailer, the way that we need to be thinking about this is there's two different ways. The first is how do I as an organization, better plan my stores, my footprint, my trade areas, my assortment using AI. And there are tools out there today that will allow you to try that. Okay. And so you should be experimenting with this right now. And the reason I say that is that if you're not and your competitors are, you potentially will get left behind, and you don't want that. The second thing that you need to be thinking about is how will my consumers be buying my products and services, and what AI will they be using in order to make their decisions? So it's not anymore about what I do. It's about the intersection between what I do and what my customers are likely doing. And so you need to understand both sides of that, because you could imagine a world where I no longer come into your store that frequently, but I get my AI agent to go look at your website and maybe interact with your agent, and they collectively make a decision about something that ought to be purchased. Sounds a bit far-fetched, but actually I think that's coming. And in that world, how do I stand out from my competitors when my customer's AI agent is looking to make a purchase?
Wow. I'm just thinking out loud here. I would say it's all going to be down to price, right?
I sincerely hope not.
Right.
No, I honestly, I think that I think in the US we are very price conscious. That's very clear. But part of that is to do with the cognitive overload of having to make those decisions. If I can now outsource that to my AI agent, my overload is gone. I can have my agent be as detailed as I like, looking at all the different features and characteristics of a particular product to say, yes, that's the right one for me. So I believe there is an option there to say it's not just about price anymore. It's obviously always going to be partly about price, but it's also, is this the exact right product for me? And I'll have a better chance of finding that than me hurriedly looking through websites or going to a mall and trying to find it.
So if your agent is so intelligent, that knows you so well, it can do, if you had all the time in the world, these are all the questions you would ask.
Exactly.
You don't, so it's going to ask them for you.
Exactly.
So retailers need to be ready with their own agents that have all of the information. Well, I really can't predict exactly how this is going to change the world. It's so interesting.
Me neither. I do. There was an old concept decades ago called mass customization. The idea that you can build a mass product or service, but have it customized to each individual consumer at a relatively low cost. And I think that this sort of AI world, the agentic future, will enable that to really happen. So, as a seller or a producer of a service, I need to be ready to say, I'm going to give you exactly the thing that you want, right? Or that your AI agent has told me that you want. And if you can do that, I think, price becomes, yes, always important, but a secondary consideration because the customer is getting exactly what they want.
In our world, in the real estate world, it sounds like you could have agents doing a lot of the questioning on behalf of a tenant. A broker could have an agent going out and gathering information as well. Are you seeing that happening yet, or are we still just talking about it?
So people are out there building things that I would call that are proto agents and not quite agents yet. and they're going out there and they're mostly doing research. So the agent's gathering information, but they're not making decisions. And so then all the information comes back to you and you make the decision. The next step is that people will start building agentic payment rails. So the infrastructure that allows an agent to make a payment on your behalf. And most likely what you'll do is you'll say, okay, I'm going to authorize my agent to pay a maximum of $100 every week so it doesn't run away and do silly things. But once that's in place, you can now let your agent start to make small decisions for you. And so the more that you can enable the infrastructure underneath the agent to allow it to do more things autonomously, likely the more that will happen. And so, yes, people are on their way. I don't think we're really quite there yet, but people are on their way to be able to deliver these ideas.
And you think, it sounds like you're pretty optimistic about that future. You think that, this stuff is really going to, likely to happen in the near term?
If we say the near term is less than 5 years, yes.
Okay.
But the word optimistic is a loaded one. I think we will have a lot of dislocation. I don't think that we are ready for it. And so there'll be this sort of uneasy coexistence of people who aren't using AI and people who are using AI. There will be some unintended consequences. If you code up something incorrectly or if you give the wrong instructions to your agent, that could end up badly. Frankly, we have to get through this. But, my view is that we've been through these sorts of technology dislocations before. And when we come out the other end, you're like, how on earth would I ever survive without this? And I hope and think that this will be the same.
Okay. Got it. Do you travel a lot?
I travel a lot. Yes.
Okay. So where's the best place to go for business travel?
For business travel? Well, that's interesting. I would say the best place to go for business travel right now is Singapore.
Okay. Why is that?
It's an amazing, very compact collection of all sorts of interesting things. It sits on the edge of two different philosophies, the Western philosophy and the Eastern Asian philosophy. It's extremely safe. It's very business-like. People want to do business. It's open all year round. Weather's always the same. And then finally, and very dear to my heart, the food's amazing.
Oh, okay.
There as well. So, when you're doing business globally, I think Singapore is a wonderful, wonderful combination of all the different things. It's like a primer, an introduction to the other side of the world that you weren't so familiar with.
Oh, that's awesome. All right, Singapore. Now it's on my bucket list.
All right.
I can't wait to go. What kind of food do you eat there? Is it like an Asian food, I would imagine?
It's a fusion. So, at the tip of Malaysia, so you've got Indian food, Chinese food, and other local varieties. I mean, they do Western food incredibly well as well. But if you're going to go to Singapore, the move is to go to the hawker stalls. So they have a bunch of these very small little stalls. They don't move around so much. They're in markets. And you can go to market, pick up 3 or 4 different dishes from these stalls, some of which incredibly are Michelin rated. They're that good.
A Michelin rated hawker stall.
Exactly.
Okay. Yeah, I mean, you had me at hawker stall because I love food markets and things like that. That's awesome. Well, that's something I didn't expect for us to talk about today. So this has been great. Raj Singh, thank you so much for joining me today. This has been a fascinating conversation.
Been a pleasure, James. Thanks so much for having me.
And if you want to hear more interviews and retail insights, you can subscribe to Where We Buy on the iPhone podcast app, on Spotify, or anywhere you listen to podcasts. Just search for Where We Buy. And you can find us on the web at wherewebuy.show. And that's a wrap. Thank you, sir.
Thank you. That was awesome.